Step 3, I have $50,000 to invest. Now, what accounts do I put it in?
So with that $50,000 from our prior video series on here as well, what account types should you first put it in? Well, assuming you're under age 50, married, filing jointly on there, you could do $7,000 per individual or $14,000 in total directly into a Roth IRA, depending on your income limit, or you could do that $14,000 into the IRA as a non-deductible contribution, and then reviewing for a potential conversion as well to that Roth IRA. So that's $14,000. Now, assuming your employer, and they say 401k as an example, has a matching percentage, typically you want to contribute up to that matching percentage and nothing more on there. Now in this case, let's say it was $10,000 we put towards that 401k match. So now we have that 14 and we have the 10,000, that's $24,000 spent. The remaining $26,000 you want to put into a joint non-qualified brokerage account or a trust non-qualified brokerage account. And the idea there is to maximize on that long-term capital gains tax structure in the future. Now again, this is examples only with that $50,000 in those account types.
Now follow for step 4 on how to invest it.